Hello, I'm Jan Arsenault, and I lead the team that produces a quarterly newsletter, Market Point. The global economy remains resilient, with economic data mostly surprising on the upside year to date, especially in the US, where resilient consumers have continued to deplete excess savings accumulated during COVID. In equities, markets are up over 20% since the low in late 2022. However, looking under the hood, we see challenges ahead. To start with, the breadth of the equity rally has been very narrow, meaning that only a few companies in a few selected sectors have participated in the rally year to date. Names associated with artificial intelligence, in particular, have been driving market indices higher. Excluding those, equity market returns have only been slightly positive year to date. When looking at the broader economic picture, our macroeconomic models indicate continued downward pressure on growth going forward, mostly as a result of the lag impact of rising interest rates. As the Fed and other central banks have raised rates repeatedly over the past year, the quantity and cost of money for businesses and consumers are going up, and with a lag, this will very likely lead to slower growth. In fact, our base case scenario hasn't changed. We continue to believe that the global economy is likely headed into a recession in late 2023 or early 2024. And given that equity market cycles typically align with the business cycle, we expect growing pressure on corporate revenues, corporate margins, and earnings in the coming months and quarters. As a result, we favor high quality and low volatility in the equity portion of clients' portfolios. A slower pace of economic growth should also coincide with a slower rate of inflation going forward. And given that most central banks are in the later stages of raising short-term interest rates, we see a more positive backdrop for bonds, particularly high-quality bonds over the next 6 to 12 months. In fact, we are incrementally adding to our bond exposure, even longer duration bonds, in order to provide additional protections to portfolios. Thank you for listening, and I certainly hope you enjoy reading our newsletter, Market Point. Watch your email for an invitation for our next Market Outlook webinar later this summer. In the meantime, you can also click the link in this email for a more complete review of our thoughts and insights. For additional articles, newsletters, and more, make sure to follow us on Facebook, LinkedIn, and trustpointinc.com. Thank you.